Morning glory and evening grace, America. I'm Hugh Hewitt. Welcome back to Hour 2. I'm joined by David Bahnsen this hour. David is the founder and CEO of the Bahnsen Group, an investment advisory firm. He is also the host of the Dividend Cafe. He is a great writer. He's written a lot of books on working, and I asked him weeks ago to do this segment on sort of financial planning for smart people before the GDP number came in at 4.3% for the third quarter day. But I'll sneak in one quick question on that, David. Are you surprised by that number?
Not really surprised, Hugh, because I think that there has been a quarter by quarter volatility, a lumpiness on those import-export numbers all year. The consumer side, for me, I'm never surprised by. That's where the strength of this report was. And I've been aware for my whole adult life that Americans love to spend money. The issue for me will be whether or not the business investment side hangs in there next year, because that was where the weakness of this report was. And that, as a supply sider, that's where I believe future economic growth comes from. And so that's what we have to be watching in 2026. It's what they call non-residential fixed investment.
Non-residential fixed investment. All right. I want to tell people that they need to listen to the Dividend Cafe this week when you went through 25 years of volatility. Bottom line, if you put $1 million in the market in 2000, it would be worth $7 million today. And that is such a slap in the face. I just wanted people to understand that good investing throughout a lot of volatility, if you do it smart, the way David's group has you do it, and I'm not a client of David's, and David is not a client of mine. I just think he's remarkably responsible and level-headed, to which I will add. So I'm going to ask you for the essentials of sound investing. I want to add as well the very sad news today. Senator Ben Sasse, former Senator Sasse, posted the unfortunate news that he has been diagnosed with stage 4 pancreatic cancer, and that it's very unlikely he's around for much longer, though he will fight the good fight, and he's got great faith in the Lord, and his family is doing okay. But it puts the line underneath the need to be prudent and fiscally responsible for your family. Having said that, David, what goes into good financial planning as people come to year end and think about their New Year's commitments to the market and their money?
Yeah, I'll echo your comments on Ben. He's a dear friend. I've never had an elected official I had a closer relationship with.
Wow.
Or one I've thought higher of. Ben is as good as they come, and it's absolutely devastating news. And our thoughts and prayers for his family. And I'll leave it there because I won't be able to keep going. The question you ask is a very important one, and it starts before people go into what should I do in the final week or two of a year. Is the bigger question to take a step back from a high level and say, what are the key ingredients for financial planning and financial organization to begin with? And I always say that you have to first define the goals, and then planning is finding the solutions that match those goals. And I don't think enough people do that. Start with just what are we trying to solve for? You can have somebody with $20 million who has a real problem in their financial planning, and you can have someone with $300,000 that has all their stuff buttoned up, because different resources lead to different needs and things to be solved for. The portfolio allocation is a big part of it, but it's not the only one. The tax efficiency, the estate planning, how do people want to transfer assets? Sometimes there's mixed marriages and stepkids and other things in life that complicate things. And so there's a lot of dimensions to this, Hugh. But it starts with just solving for what your short-term, mid-term, and long-term goals are. And most financial planning in America revolves around the long-term goal of future income streams that can outlive somebody. And we want people living good, long, healthy lives. And therefore, if they're going to have a period of time without incoming income, they need that future income. And look, I make the comment in Dividend Cafe because it's mathematically accurate that for this crazy 25 years to start off this century we've had, that people have made 7.5 times their money if they just started in the S&P and woke up today. And my goal in pointing that out is not to tell people, go put 100% of your money in the S&P. I don't recommend that. And people could have done a lot better than that doing other things but the point being, you at your age, me at my age, other people with different resources, their portfolio should look different because everybody has a different risk appetite, different goals. I think that, go ahead, Hugh, I'm sorry. I've been going on a long time.
Well, no, I want to make sure you get a lot of runway here. I want you to answer the question, who needs a financial planner? Now, and I have no dog in this fight. I'm all set. My kids are all set. As I said, I'm not David's client, but I trust David. I've known him for, I don't know, 25, 30 years. And he does very well by his clients, but I'm not one of them. But I thought he'd be really good, because he's good on air, at answering who needs a financial planner and how do you find one?
Well, and that's the thing, is that there's different financial planners that accommodate different needs of the market. You know, my firm tends to deal with wealthier people, and I think sometimes that there's a financial planner needed for a college graduate who doesn't even have assets to manage yet, but they're trying to figure out how to reduce credit card debt or how to reduce student loan debt or how, with this new job they have, to accumulate their 401k assets. So I don't know anyone who doesn't need some financial planning or guidance, but the needs are going to be different, and different types of firms exist to meet different types of the market. But once someone does have assets, the answer is pretty much 100% of people who are going to need some guidance or some organization around the accumulation, preservation, and transfer of those assets, those resources. You start adding in things like marriages, estate planning, children, stepchildren, you know, caring for aging parents. A lot of complexity can enter the picture. And much like the legal profession, where you've spent so much of your career, there's different elements of advice that are going to be tailored to different people depending on their need. And I think finance is very similar.
Now, it is my experience that the biggest impediment to people is they don't want to, what we call the open kimono, a lawyer. I always tell my clients when I used to practice, I got to know everything or I can't help you. You can't hide the ball on this and expect me to give you the right advice on a land use issue. Do you get people who come into the Bahnsen Group and don't tell you the full story so that you don't know actually what you're advising them on?
It happened much more earlier in my career. I've gotten better over the years at not allowing it to happen. And, you know, we now have a larger, more sophisticated firm. I have 91 people that work for me, and we're managing $8.5 billion. And so we have the ability to kind of know the whole picture. But to the extent that somebody always can hide some part of the ball or just not tell you certain elements, it can definitely happen, but it is only hurting them. And what we always say is, we're not here to get all this information for any other reason than to give you the best possible advice. And I have no doubt it's true in any other element of the legal advisory or business consulting, what have you. That information becomes very necessary to have context, to have the right nuances, et cetera. So yeah, it can happen. But I think that a lot of times people believe that if they disclose everything, then someone's going to try to sell them more things. And that's why I recommend that no matter what financial planner or wealth advisory relationship you're working with, you're not working with someone who has products to sell you, that they're working on a fee for advice, because you need them to be aligned with you, eliminating that conflict of interest. So it's what we refer to as a legal fiduciary. Not everyone giving financial advice is operating as a fiduciary. My firm does, and plenty of other good firms out there do, but people are right to be skeptical if they're worried they're going to get sold something.
So what questions, we got about 2 minutes, David, and we'll probably do this in the new year as well. What questions should people ask in their first sit down with a financial advisor about whether or not they're going to hire them? What should they ask them?
You know, I think that some of the early questions have to be very probing, relational type questions. You can ask someone, what were you up this year? Or how did your portfolio do last year? Those things. But ultimately, getting the real short-term performance side, first of all, if they answer, that might be a good trick question, because I wouldn't work with anyone who even answered it. How can they tell you how they would have done for you before they know you? So telling Mr. Jones how they did for Mrs. Smith is an irrelevant question. But I think you want to ask questions that help get to know them as a person. because so much of this is trust, and you want to know what their values are. Are you aligned? How do you see the world? Their work ethic. You know, when a financial advisor starts off telling you their handicap or what golf clubs they're members of or whatnot, that's all fine. A lot of advisors want to be able to brag about their own financial position. You know, I will say this, Hugh. One of the reasons I think a lot of people have liked working with us, I think people are well aware that I'm financially comfortable, but they also know that I'm constantly working. And I think advisors that brag about how little they work, I would knock them off the list. Let's start there.
So let us start there, and I will also start by sending people to the Dividend Cafe. It's on every podcast. Listen to the most recent one on the last 25 years in volatility, and then get smart. David will be back in 2026, and we'll continue this conversation to make everybody financially literate. Stay tuned.